Hello and welcome to Macro Decode. The announcement of a ceasefire in Iran has reversed the trends in the commodity and currency markets. While gold, silver, platinum, and copper have moved up, crude oil and natural gas prices have receded. The US dollar has weakened and the rupee has made some gains. To understand the dynamics of the commodity and currency markets and their trajectory going forward, let's talk to Jateen Trivedi, Vice President, Commodity and Currency Research at LKP Securities. Hi, Jatin. Great to have you here.
Hello, Sangeeta. It's a pleasure, doing the show with you.
Yeah. So, the ceasefire announcement has led to a trend reversal in the commodity markets, especially gold, silver, platinum, copper, crude, and natural gas. Can you elaborate on this?
See, up to 13 hours before this, we were in a spot where expectations were high that something big attack sort of thing on Iranian power plants and everything was expected. But
Hmm.
a ceasefire was not anticipated by the markets, and hence
Hmm.
the market reaction always comes very strongly where there is a reversal kind of a reaction or the sentiment reverses from there.
Hmm.
Overall trajectory will still be on the projections of how the ceasefire talks goes about in the next 2 weeks. Gold, silver have definitely shown some positive rallies of 2 to 4%
Hmm.
individually, and crude
Hmm.
oil has shown some negative reaction of 15%.
So, what about platinum and copper? Even those metals have actually appreciated.
See, platinum again, along with bullions, has shown some strong strength because of this inflation-related issues that which was going to arise. Now, some kind of relief can be seen because the dollar index has also retraced, and the other all the assets against the crude oil and dollar index has reacted a little bit positively. So, we have
Oh,
seen the rally in platinum by 5% and 2 to 3% copper prices have also risen.
oh. I think there was a big crash in crude oil prices and even in natural gas. Can you tell me a little more about that?
Yeah, definitely the main reaction has been on percentage terms onto the crude oil prices, which have increased around about 80 to 90% in the last month or so,
Okay.
where the war side escalations were on the higher side and the prices had rallied from 65 $70 to 115 $120 peak,
Hmm.
respective to WTI and Brent prices. And hence the reversal here has been seen with respect to both the prices.
Right. Now, even in the currency market, there has been a lot of, movement that has been happening in US dollar and rupee. Tell me about that.
Sangeeta, see, the dollar index somewhat has been positive, but not much of a positivity has been seen in dollar index because has been a very strong cap for the dollar index because US itself runs into the debt crisis. US itself has trade tariff issues with other countries, which
Yeah.
can keep the growth related issues in the US, and hence the dollar prime has not been seen, which it should have seen in this last 1 month of March. Along with that, the crude prices rising has definitely supported the dollar index because the other asset classes have reversed and the other currencies have also not participated heavily onto the depreciation side. If we see the
Okay.
basket of currencies, the dollar has been taking resistance at 100, taking support at 98.50, 98. But I think the ceasefire talks, if it goes positively, we will see the dollar index coming back again towards the 95, $96 mark.
Okay. And what about rupee today?
Rupee also has shown some positive reaction by 0.5%, half percentage point positive reaction on back of ceasefire. But I
Uh,
think the governments and the RBI steps towards strengthening the rupee has given the initial start for the rupee to appreciate from the 95 mark against the dollar. When we had seen the banks to reverse their positions of overly positionings on the dollar, and hence we
hmm.
have seen the rupee, appreciating from 95 mark towards 93, 95, 93.50. And thereafter, the ceasefire talk again initiates a fresh buying for the rupee against the dollar. So I
So
think
this,
the cycle will be simple. Crude oil coming down, rupee will be showing some upside potential.
but this is this a blip because of the ceasefire announcement, or will we see a continued movement going forward?
See, as much as the ceasefire talks continues on the positive side, the rupee will take support. But
Okay.
any violation of the ceasefire will definitely, see negative knee-jerk reactions into the rupee as well and all the other asset classes. So this is not a permanent solution as of now. It is the
Mhm.
initial stage of towards a solution towards the main problem of geopolitical issue.
Okay. Now, coming to gold and silver, from their peak levels in January end, both the metals had technically entered into a bear market. Usually,
Yeah.
gold is preferred as a safer and asset during geopolitical tensions. This time, gold fell around 15% and silver
Right.
20% in the Indian market since the Iran war started. Why weren't investors buying bullion during this crisis, and what were they buying instead?
See, if we compare it to the geopolitical issues faced in 2022, where Russia-Ukraine war, and
Yeah.
now in one scenario, US is involved. So
Hmm.
a war in which US is involved is negative for gold and silver because the inflation creeping up indirectly would, trigger the gold dollar index to go higher, and war premium should be there on gold only if all prevails for a longer period of time. The positive side of ceasefire will continue supporting the gold prices because inflation coming down. A Federal Reserve will have room for cutting the rates sooner.
Hmm.
That is again going to be positive. But the gold has not taken the war premium in the month of March. Uh, but the longer period time of war continues, then gold should also get benefit of war premium.
Okay. What about crude oil prices and the gold relationship here? Because, I think people were preserving their dollar to buy crude. In that case, were they actually keeping away from gold?
I think the timing of this all thing is also matters because before getting into this war front or before getting into this situation of geopolitical issues, gold has already seen a massive rally in the last 2 years.
Yeah.
Only considering the 2025 year itself, we have seen a strong structural rally from the base case of around 1 lakh to 1 lakh 10,000 to 1 lakh 80,000 peak that we had seen in
Mm.
January, and
Mm.
then reversing from there 20%, which was due since a lot of months, but the margin calls, coming out and that triggering out into a profit taking zone. And thereafter, this war news again reacting negatively had been the case that gold had not rallied before this geopolitical issue, then I don't think gold prices would have reacted so strongly negatively on this month of March. It would have
Okay.
been,
But
in fact, flattish or reversed.
even in the month of February, we saw prices coming down. Was it because of the margins being increased in the exchanges, or was it something else? Was there a
No,
fundamental issue?
no, definitely because of the margin issues. Fundamentally, nothing has changed. The month of February was a collage of things, which is the margin calls, margins being high, geopolitical issues creeping up, and hence the prices had seen some negative reaction in the month of February and March.
What about the margins? Have they come down, or are they still at the higher levels?
Margins are still a little bit elevated, not as much as median level, which was seen before.
Do you think the metals will be rebounding? They're all-time high levels because Goldman Sachs and UBS foresee a rebound in gold this year,
Yeah.
but not close to the record high levels
I,
that we saw in January. What is your outlook, and what could be the factors supporting this?
See, near-term outlook still remains a little bit volatile and uncertain because it is news-driven right now and not fundamentally driven for, say, a quarter or so. The
Hmm.
volatility range will be there between around about 1,60,000, 1,65,000 on the higher side on domestic prices,
Hmm.
1,35,000, 1,40,000 on the lower end in domestic prices. Again, on the COMEX front, we might see 5,200, 5,500 as well on the higher side, but
Hmm.
4,000, 4,200 also remains open on the lower end. So this is the short-term projections. On the
Hmm.
longer term, the US debt crisis, trade tariff issues, these all things are going to continue, and this will benefit the gold price hedge and the portfolio allocation that the central banks have been doing in the last few years. So this is going to still benefit the gold prices, and supports will be seen at lower levels for the longer term projections.
Oh, so U.S. Federal Reserve's interest rate decisions have been influencing the bullion prices. Do you think now they would probably reverse their monetary policy, and that will be supporting gold and silver?
Before this ceasefire, the Federal Reserve's policy was focused on the inflations, and hence we have seen the gold prices thing on that
Hmm.
front. But one rate cut, that is what is anticipated for this year. If the ceasefire continues and the war gets de-escalated, then
Hmm.
definitely Federal Reserve will have some room to cut another half a percentage or so. So I'm not anticipating another cut as of now in the near term. But yes, the dovish stance from the Federal Reserve Committee in their policy will
Okay.
definitely help the prices to start inching upwards towards 5,500, as well.
But at this point of time, what do you think? If the war resumes, will we see bullion correcting again?
The war continues, definitely crude oil prices will shoot up. Crude oil prices shooting up will be negative for all the asset classes, including gold, rupee, and other asset classes. So these all asset classes will drop, and the gold will also get impacted on negative side because Federal Reserve will not have any room for cutting down the rates. A country in war zone cannot have room for cutting rates and flowing in liquidity.
Do you think both gold and silver will share the same trajectory going forward, or we will see silver making more gains or lesser gains compared to gold?
See, fundamentally, silver is supported. Definitely, the demand is going to structurally be there. But on immediate basis, where we had seen a very strong peak of more than $100, that was a signal of overbought situation, a hype which was created, a 4 lakh rupee price on domestic prices. So though that kind of a rally which we had seen in 2025, not expecting that much of a rally this time around, but gradual and steady volatility will reduce. There will be a period of stabilization of prices where the fundamentals will play into the picture, and then we'll have the continuation of the longer term projections. So yes, medium term to short term, pain is there, volatility, uncertainty will be there. But post a few quarters down the line, the projections of higher side of a rally is definitely going to be there in gold and silver. And individually, I think silver will keep outperforming gold.
Okay. And coming back to crude and natural gas prices, they have made significant correction due to the ceasefire. We see them going back to the pre-war levels.
If the war, de-escalates and yes, ceasefire announcement shapes up into a proper deal between US, Israel and Iran, then $65, $60 crude prices in WTI Brent will definitely be on the cards.
And what if that doesn't happen?
And then definitely 120, 125 levels will not be a much of a hurdle. In fact, higher levels will be escalated from there.
Okay. So the things are very precarious. We have ceasefire, but it's going to be more uncertain, like whether we are going this way or that way. So thank you for joining me on this show, Jatin. It was nice talking to you.
It's a pleasure, Sangeeta, having with